Welcome back to Accounting for the Senior Cycle. We are still on bank reconciliation statements. In the previous class, we talked about reasons why we have to prepare a bank reconciliation statement. That means the purpose of bank reconciliation statement. The first one is to reconcile the bank balance, the balance of the bank statement with the balance in the business's own bank account. So we want to reconcile the balance we have in the bank statement with the account balance of the business. That's one purpose of bank reconciliation statement. Another purpose is to calculate the bank figure for the purpose of preparing the balance sheet. Because the business needs to prepare a balance sheet, and in the course of preparing the balance sheet, it's important for the business to know the liabilities and the assets it has as at when due. And that can, it could reflect, it can be known through the bank statement. And the last reason why we need to do bank reconciliation statement is to ascertain the amount of money the business has in its bank account, which is on the debit side of the bank account, which is on the debit side, or the money it owes, which will be on the credit side of the bank account, which is in form of overdraft. We talked about what an overdraft is. An overdraft, a bank overdraft is a credit facility that allows a business to withdraw more than its available credit balance. So today we are going into the preparation of the bank reconciliation statement. So when we are preparing the bank reconciliation statement, the first step is to compare the debit side of the bank account with the credit side of the bank statement. Comparing the debit side of the bank account is the business's account, which it has in its office. You compare it with the credit side of the bank statement. So the debit side of your bank account must be equal to the credit side of your bank statement. So how do you know if it is? If they tally, you place a tick on each box. You place a tick on each box. That will allow you to know if there is any discrepancy or there's an error within the information you have gathered. 2, compare the credit side of the bank account with the debit side of the bank statements. Place a tick beside the items common to both. So the same thing you've done for the debit side of your bank account, you have to do it on the credit side of your bank account. Now, when you are comparing the credit side of your bank account, you compare the credit side of your bank account with the debit side of your bank statement. You compare the credit side of your bank account. When we talk about the bank account, we're talking about the business's account, the account the business has in its possession. You compare the credit side with the debit side of the bank statement. The credit side of your bank account or your bank statement represents the money you have. The debit side of your bank statement represents the money that has been taken from your bank account. And as soon as that is done, when you place a tick when you place a tick on those items that are common, the items that are left that are unticked will now be used to prepare the adjusted bank account. So then you prepare the adjusted bank account. So when you are preparing the adjusted bank account, the debit side of your adjusted bank account will have your balance as per bank account. That means your credit balance from the bank account. So what we're saying there is that those items on the debit side of your adjusted bank account, you're going to have the balance, which is what you have on the credit side of your account. The balance on the credit side of your bank statement will be your balance as per bank account on the debit side of your adjusted bank account. On the credit side, you will have the balance as per bank account on the credit side only if your account is only if you have an overdraft from the bank, which simply means you'll be having a debit from the bank. So whatever you have on the debit side of your bank account, of your bank statement, be on the credit side of your bank account, adjusted bank account. Then place any unticked items on the credit side of the bank statement on the debit side. So the other item you place on the debit side of your adjusted bank account are the unticked items on the credit side of your bank statement. You are comparing your bank account with your bank statement. The credit side of your bank statement, whatever is on the credit side of your bank statement that is unticked, that means it is not it's not appearing in both sides. It's not appearing in the debit side of your bank statement and is on the credit side of your bank account. So it is unticked. So those items that are unticked on the credit side of your bank account, of your bank statement, will be recorded on the debit side of your adjusted bank account. Then, those items that are unticked from the debit side of your bank statement, those items that are unticked on the debit side of your bank statement will be recorded on the credit side of your adjusted bank account. That is the next step. Then the last step is you preparing the bank reconciliation statement. And how do you prepare the bank reconciliation statement? The first thing is your balance as per bank statement. Your balance as per bank statement, if it is an overdraft, it will be on the credit side. It will be on the debit side. And if it is your balance, it will be on the credit side. So your balance as per bank statement will go there. Then you add lodgements not yet credited by the bank. Whatever amount of money that you have lodged into the bank, that you have deposited into the bank, that has not been credited by the bank, you add it to your bank reconciliation statement. Any debit entries made in error by the bank. So whatever debit entry from the bank statement that you figure out when you are doing your reconciliation, you add it to your bank reconciliation statement. Then what are you going to take away? Checks paid, that's unpresented check. Checks paid but not yet presented for payment. Those checks that you have issued to your supplier that your suppliers have not presented to the bank, you have to less it from your bank reconciliation statement because it has not been debited in the bank reconciliation statement. Then any credit entries made in error by the bank. So whatever errors that are made from the credit side of the bank statement will be less. You deduct it from the bank reconciliation statement. So your bank reconciliation statement will have balance as per bank statement. You add lodgements not yet credited, uncredited check. We call it uncredited check. Then you add any debit entries made in error by the bank. Then you less unpresented check and you add it with any credit entries made in error by the bank. So the final figure you get will be your balance as per adjusted bank account. That is how to prepare a bank reconciliation statement. So to prepare a bank reconciliation statement, the first thing you have to do is to compare the debit side and the credit side, the debit side of the bank account with the credit side of your bank statement. You compare the credit side of your bank account with the debit side of your bank statement. As soon as you are done with that, those items that are unticked, you use it for your adjustment, you use it in preparing the adjusted bank account. As soon as you prepare the adjusted bank account, whatever figure you have becomes your balance as per bank statement. Then you add uncredited check and any debit entries made in error by the bank. You less unpresented check and any credit entries made in error by the bank. So whatever you get will become your balance as per adjusted bank account. That is how to prepare a bank reconciliation statement. So here we have a question. So we have the bank account. So what we do here is we compare the bank account with the bank statements. So let me put the page into two so that it becomes easier for us to see. So here we have a bank account and the bank statement. So we're going to compare the debit side of the bank account with the credit side of the bank statement. And we're going to compare the credit side of the bank account with the debit side of the bank statement. So we have our balance brought down, which is on the debit side. That's balance. Since it's on the debit side, it means we have the money, that's the available balance we have at the bank. So we check, it is present here. So we have the sales lodge, 19,002 on March 9. It is not presented here, 19,000, okay, it's here. So the debit side for March 9 tallies with the debit side here, which is 19,002. Then we check lodgement for 6,008, it is present here. But we have sales lodged to 11,200, which is on the debit side of the bank account, is not on the credit side of the bank account. So there's an error there. So there is uncredited check of 11,200. We put that on the side. Then we compare the debit side, the credit side of our bank account with the debit side of the bank statement. We have Ralph for 2,600. Ralph for 2,600 is there. We have Rate for 6,400, rate for 6,400 is there. We take it. We have 1,880 is here, 1,880 is here. We have check dishonored 1,640, a dishonored check is there. So a dishonored check, we have to add it up. Then we have, so items that are missing now are dishonored check. We have dishonored check on the credit side, which is not there. We have, what else do we have here? 5,440, which is Quigley, Quigley, 5,440. It's not there also. We have, you on ticket. We have 7,800 is present. We have advertising. The amount is the same. We have bank charges. It's not going to be there because bank charges comes. These are one of the reasons why we need to do a bank reconciliation statement, because bank charges might not be recorded by the business. Then we have the standing order of 120 is not here. Then we have Charlie Power 480, which is not also here. So that allows us to, so we have, note, the 480 euros entered in the bank statement on March 30 was entered in error to Carol Power's account instead of Charlie's Power. So there's an error of commission here. Instead of Charlie Power, we record it, instead of Charlie Power, we record it into Carol's Power. So now the solution. So the balls has been ticked. The balls have been ticked. So the debit and the credit side have been compared to each other. So now we have to prepare the adjusted bank account. So for the adjusted bank account, what are those things that are not present on the debit side of our bank statement? We have Quigley 5440 900. So we have 8280 5440. So we have 8280. Those in the bank statement on the credit side of the bank statement will be presented. Those unticked on the debit side of the bank statement will be credited on the adjusted bank account. So we have two ticks here, two boxes there. The balance, which is 8,280 and 5,440. Now they are there. 8,280 and interest received. We have an interest received of 420, which has not been recorded. So this will be on the debit side of the bank statement because this amount of money belongs to the business. Now on the credit side of the bank, adjusted bank account, we have dishonored check will be on the credit side because the check has been dishonored, which simply means the amount of money still, the money has not been paid to the amount of money has not been paid to the supplier or to the business's client. So it has to be on the credit side of the bank, adjusted bank account. Then the bank charges, it has to be taken away from the bank. So 170, it has to be taken from the bank account, 170, the standing order 120, then we add them together. So the balance carried on with the difference from the debit side and the credit side, which is 6,770. So our balance as per adjusted bank account will be 6,770, which is already here. So now our bank reconciliation statement. In the bank reconciliation statement, we have balance as per bank account. The balance as per bank statement for Charlie Power is March 30, Charlie Power 1,000. The balance as per bank statement is 1,430. We add it up here on the credit side. Then we add lodgement, not yet credit. Then we have a lodgement of 11,200, which is not, this is the sales lodge here. It has not been debited on the bank statement. So we put it on the bank statement. It has not been on the bank statement. So it's on the debit side, it should be on the credit side of the bank statement. Then that's the 11,200, that's all. Then the error by the bank to Carol Power instead of Charlie Power, you add it to your bank statement, the bank reconciliation statement, then you add them together. So that's the total of what the bank, that's the total of what the bank has. Now we less unpresented check. There's unpresented check of, now you check your credit side for unpresented check. We have unpresented check by Quigley on the credit side of your bank account. It's supposed to be on the debit side of the bank statement. So it's not on the debit side of the bank statement for Quigley. So unpresented check from Quigley, 5,440. And we have B Young also for 900. You add them together, then you take it away from the amount the business has. So that will give us the balance as per adjusted bank account, which is the same as what we did the other time here when we had it. So here our balance as per the balance brought down is 6,770, which is the same here in our bank reconciliation statement. It has to be the same. The adjusted bank account must equal to the bank reconciliation statement. In your adjusted bank account, what you have to do is your balance brought down, which is on the credit side of the bank statement. Then the interest received should be on the credit side of your bank statement also, because this one, they belong to the business account. They belong to the business. So those payments that has been done, that has not been presented to the bank, unpresented check, or credit that has not, errors on credit that has been made by the bank, will be on the credit side of your adjusted bank account. Then you take it away from the debit side of your adjusted bank account. That's how you finish up with your bank reconciliation statement. So for bank reconciliation statement, the only thing you need to do is first, you check the credit side of your bank account with the debit side of your bank statement, the credit side of your bank account with the debit side of your bank statement. You tick the box that are the items that are the same. Those items that are not the same go to your adjusted bank account. And whenever you are preparing your adjusted bank account, items on the credit side of your bank statement be on the debit side of your adjusted bank account. Items on the debit side of your bank statement will be on the credit side of your adjusted bank account. Then as soon as that is done, your final answer should give you the same as your bank reconciliation statement, which is balance as per adjusted bank, which should be the same with your bank reconciliation statement. So this is how to prepare a bank reconciliation statement. Thank you. So in the next class, we're going to chapter 3, I think. So after this, we're going to chapter 3. So this is chapter 3. So I think this is the end of chapter 3. So we'll be moving to chapter 4, depreciation of assets in the next class. Thank you.